Let's talk about a pack that has been underperforming not only today but also for the last 15 sessions, and I'm talking about oil marketing companies. You have IOCL, HPCL, BPCL, all are down between 8 to 11% in last 15 days. What's wrong, and is it right time to buy? Soumeet is here with more on that.
Yes, the oil marketing companies, in fact, the state-owned oil marketing companies have been under pressure. IOCL, HPCL and BPCL are down anywhere between 8 to 11%. Now, obviously, the Russian crude ban is one of the reasons, but that is not the only reason why the stocks are down. Firstly, the reason is the fall in the Singapore gross refining margin, which is the Asian benchmark for refining margin. Now, in the first quarter, they averaged around $5 currently, and so far in the second quarter, they have averaged around the $3.2 per barrel mark. And this drop in Singapore gross refining margin is largely owing to the uncertainty owing to the global demand and the rising inventory globally, which has led to this lower GRMs. When it comes to marketing margin, which is the other segment for the oil marketing companies, in the first quarter, the gross marketing margin that the oil marketing company earned by selling every liter of petrol and diesel stood at close to 8 to 10 rupees per liter, and this has dropped to around 5 rupees per liter so far in the second quarter. Now, this drop is owing to the adverse movement that we have seen in crude oil prices and because of the adverse movement that we have seen in exchange rates. Now, apart from that, there was a weak performance that we have seen by all the peer companies, that is Reliance Industries, MRPL and Chennai Petro in the first quarter of FY26. For Reliance Industries, the O2C segment, which is the oil to chemical segment, that EBITDA dropped nearly 5% on a sequential basis. For MRPL, the GRMs were down 19% on a YY basis, and for Chennai Petro, the GRMs were down around 49% on a YY basis. So this weak performance coming in from the peer companies has also put pressure on the oil marketing companies' share prices. Now, apart from that, the Russian ban, uncertainty around the Russian crude is also one of the reasons, and this is owing to the renewed sanction on Russian crude exports by US, and this could cost the oil marketing companies, their cost of sourcing crude could increase by around $1 per barrel, and that could also have an impact on the earnings going forward. So that is one of the reasons. These are basically the reasons why oil marketing companies have been under pressure. But what are the key triggers or key positives going forward? Firstly is the LPG compensation. Now, there are multiple reports that the government could pay a part of the LPG subsidy for the oil marketing companies anytime soon. In fact, we spoke to IOCL management and they're expecting this subsidy to come in anytime in the second quarter of FY26. So that could be one of the key positives. When it comes to marketing margin, yes, they are down on a sequential basis, but the marketing margin that the oil marketing companies are currently earning of around 5 rupees per liter is still way higher than what the historical average was of around 2 rupees per liter over FY18 to FY25, what we have seen. Apart from that, the ban on Russian crude is still ambiguous. There's no clarity on this because yesterday's government statement clearly hints that there has been no curb on sourcing or procuring the Russian crude. So even going forward, oil marketing companies could procure Russian crude if it is available at a discount, and that could also lead to lower crude prices for the oil marketing companies. Apart from that, if you look at the valuations, they continue to remain at par or at discount. For IOCL, it is largely at par with its historical average. For BPCL, it is at par, and for HPCL, it is trading at a discount compared to its historical average. And lastly, if you look at the return potential for Indian Oil for OMCs at this point of time post the correction, IOCL has a return potential of 13%, BPCL of 17%, and HPCL close to around 12% from the current levels.
Right. Thank you so much, Soumeet, for all the details. Well, Avinash, let me come to you on this. I'll ask you this question. All these OMCs, is it time to buy, to wait, or to watch? Avinash, I think you're on mute.
Yeah, sorry. Varsha, I think it's clearly from a medium to long-term horizon, oil marketing companies definitely look pretty attractive. But I think if you look at the near-term challenge of rising crude prices, there could be some supply-side pressure and some margin pressure, for their GRMs. Longer term, I think we continue to be positive because both the automobile and the aviation pockets are growing quite rapidly. And definitely, I think the opportunity to grow is quite significant. So maybe, in the second half, you could see a good bounce back from these companies, specifically IOC, BPCL, where we have been quite constructive. So I think, from a long-term, slightly, 6 to 12-month kind of time frame, it would be a good decision to buy them when, the stocks are under pressure. But in the short term, I think don't expect any immediate upside from them.
Right. Thank you so much, Avinash, for that view. Vinay, how are charts looking, when it comes to IOCL, HPCL and BPCL?
Yeah, so all three are in a correction phase. But if I were to compare with each other, then BPCL looks the strongest because it is above the 50 and 200 days average, while IOC and HPCL are going a bit weaker. So BPCL looking strong, and it looks like that they are into a correction phase in an overall bullish trend. So no doubt we have seen a fall from the 315, almost 10% correction in the stock like BPCL, but the medium to long term charts are suggesting bullishness. This is just a short term correction which is going on. The strong supports are placed around 300 odd levels, below which there is a strong 200 days average support placed around yeah, 300 is the 200 days EMA support, so that is a very strong support. So relatively chart of BPCL is looking much better than the HPCL and IOC, and it looks like that it is overall correction phase in the bullish trend.
Regards to where OMCs go, let's look at